Okay, give it just a second. Sometimes it's a little slow to start. You're good.
Okay. Good morning, everyone. Yes, it is still morning. This is the Insurance Subcommittee of the Health Committee in the House of Delegates. We have 4 bills on our agenda today. We are going to start with House Bill 1112, and then we're going to House Bill 746. Then we're going to House Bill 1068, and we will end with whatever time we have with House Bill 1093. I will say now, so that folks know, we will be having another insurance subcommittee meeting on Friday. The agenda of that meeting, we hope to get out to you maybe tomorrow or early Thursday. So it'll be sometime in the afternoon after the Health Committee voting session. So with that, we're going to start with House Bill 1112. And Lisa, would you tell us what it does?
House Bill 1112 requires the Maryland Health Insurance Coverage Protection Commission to study and make recommendations for individual and group health insurance market stability. There is an amendment that strikes the requirement for an actuarial analysis on premium savings if a public option were to be implemented. And the amendment also, it requires the commission to consider whether to adopt a direct payment system or fee-for-service model for all services covered by Medicaid, and to identify ways to sustain and increase premium assistance in the individual market.
Okay. Does anyone have any questions about the amendments? Do I have a motion on the amendments?
Amendments.
Okay. And do I have a second?
Second.
Okay. Any discussion on the amendments? Seeing none, those in favor of the amendments, please say aye.
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 Is there anyone opposed to amendments? Seeing none, they are passed unanimously. And let's go to the bill now as amended. Do I have a motion on the bill as amended?
Move the bill as amended.
Okay. Any
Second.
second? Okay. Okay, discussion on the bill as amended. Is there anyone in the room from Progressive Maryland? Because I understood they wanted to say a word or two.
How much they love the bill?
Yeah, how much they love the bill, right? Okay, not seeing anyone. Is there any discussion on the bill as amended? Okay, I've got Yvette Delph. Yvette? Yeah, there you go.
Hi, good morning, members of the subcommittee. I am curious about whether the Medicaid administration would be included in this commission to consider this important bill with the amendments around Medicaid.
Yes, the answer is yes. They are already included in the commission, but they will definitely be a part of the decision, and I'm certain they'll bring in experts to speak to the commission as well. So, they will have a strong voice in this. Alankrita Olsen.
Yes, thank you, Delegate Cullison. I'm just worried the bill language as it stands does not convey the urgency of our current situation. The Federal Reconciliation Act will cut $1 trillion for Medicaid in 10 years, most of it in next year in 2028. So I don't think we have much time to be able to figure out revenue savings to actually address the funding we'll lose from Medicaid. There is no deadline implicated in the bill for when the information from the commission needs to be put together for actual consideration in terms of follow-up legislation. And also, the question seems to be considering whether to adopt a fee-for-service model, but I think there's quite a bit of evidence, especially in the past 12 years of Connecticut in removing managed care organizations, that we could save quite a bit. And the latest study shows $520 million a year that we could save. So it would be, I think, also because of the urgent situation, good for the study to include how we would actually effectively and quickly implement a fee-for-service model within Medicaid, on top of considering whether to adopt that model.
So this commission was created out of a sense of urgency. It was created expressly to address the concerns that were coming from federal action on healthcare. So its existence is indicative of the sense of urgency that we feel. And certainly any documentation, evidence we have around this proposal, we will, the commission will be considering. So I can't tell you, what will be the outcome of that discussion, but I will tell you that I believe strongly that putting that question into this commission is much more expedient than any other body because of the way it was designed. Mr. Nguyen, Joe Nguyen.
Madam Chair, good morning. How are you?
Good morning. Good.
I shared with you, and I'll share with the subcommittee, we're opposed to the amendment. We think it's a distraction and sends the wrong signal during probably one of the most challenging times facing the state and the country as a result of HR 1. We're going to need all the channels that we can get to share information about implementation and the effects of HR 1, which are real. I just think it sends the wrong message. There's nothing inherently wrong with studying any topic, as you know. But the General Assembly built health choice over the last 29 years iteratively into what it is today. It's an outstanding benefit that anyone on Medicaid today should be proud of. It's very comparable to the commercial benefit, and we don't believe that the report that was shared in committee is an accurate reflection of savings, considering our all-payer model and the way we're woven into all aspects of the landscape of Maryland.
So Joe, we've accepted the amendment, and that's the kind of discussion the commission will be having. So, putting it into the bill means we are going to study it. So we'll be asking for feedback, information, thoughts as we go forward in the commission.
Understood.
Okay. All right. So I have a motion on the bill as amended. Is there any further discussion from the committee members? Okay. Seeing none, those in favor, please say aye.
Aye.
Anyone opposed to the bill as amended? Anyone opposed? Seeing no one, the bill passes unanimously. Thank you all. Thanks for your discussion. And I want to thank the folks who are really working hard and advocating for folks who are struggling to pay for health insurance. We're going to move now to House Bill 746, which we held last week because we were waiting on some new information. And I'm going to ask, first, Lisa, tell us what 746 does.
The bill prohibits the Maryland Department of Health, as well as carriers, from imposing a copayment, coinsurance, or deductible requirement on coverage for services provided in accordance with the collaborative care model.
Okay. I'm going to go to David Sharp. David, you were telling us last week that you were finishing up the study on this, so let us know what you found.
Sure, and good morning, Madam Vice Chair and members of the committee. It's a pleasure to be here today. As you all know, that I'm representing our Executive Director, Dr. Douglas Jacobs, in my commentary this morning. Yesterday, we had the pleasure of submitting at the end of the day a financial analysis of the impact of eliminating cost sharing. And we looked at it specifically based upon data we had in the all-payer claim database. And I'll just share with the group, again, we've submitted formally the information, but the MHCC estimates that eliminating cost sharing will add about 0.09 cents per member per month or about $1.04 per member per year to fully insured and privately insured healthcare premiums, an increase of about 0.01%. The MHCC concludes from its analysis the impact of eliminating cost sharing will be minimal for the carriers. We would also note that there are two other items that are informative to keep in mind, but were not included in the analysis. Specifically, in the 2025 recommendation report to the Governor and General Assembly put forth by MHCC and the Primary Care Investment Work Group, there was an explicit recommendation about eliminating cost sharing for the collaborative care model. And in addition, various literature reviews continue to show that there is a cost offset to ED utilization and emissions by eliminating cost sharing. So based upon our financial analysis, a recommendation from the independent primary care investment work group established in statute, as well as literature review, we would encourage a favorable report on the bill, and I'm happy to answer questions, Vice Chair.
Okay, thank you. So questions for Mr. Sharp? I have a question, seeing no other hands. What methodology did you use, since we've not looked at eliminating cost share before specifically? So did you have a particular methodology that you used to do that?
So yes, we use the medical care database. We use an actuarial approach that's similar to the models used in other studies that the legislature has asked us to do on mandates. And we specifically looked at it, actuarially speaking, on the entire fully insured population and to determine the exposure. So the analysis model is consistent with what's been used previously for other legislative studies.
Okay. Matt Celentano.
Thank you, Madam Chair. I appreciate the opportunity. The carriers are still opposed to this bill for a variety of reasons. One of which is that actuarial analysis that is normally done through statutory enabling on mandates is mandates alone, right? And it's not necessarily the inclusion of the covered service. This bill is a little bit different. It is on cost share. So to be able to get to what the impact of what the pass through to the constituent or to the beneficiary would be by just using claims data isn't going to tell you the full story. Taking away cost share is a completely different thing. This is also a space which the world has adapted and evolved over the last couple of years. And now the carriers are all covering collaborative care models without a mandate. But there are new carriers that are covering it in the last year. So the all-payer claims database wouldn't have captured all of those carriers that are now doing it newly, wouldn't have been in the database yet. There also was no data requested from any of the carriers. So you getting this quick analysis might give you a trend or an indication, but without full actuarial analysis of what this bill actually does, we don't really know. There was also no review by the MHCC commissioners to sort of enable a pro stance, so to say, on this bill. We think that this bill is best suited to go through the normal process that we do every year to give you a full picture of what the actuarial analysis and what the premium impact would be. I saw the letter that was shared with some of the committee last night, and it is ranging. It also says it's about 10 cents per member per month, which is what you guys have heard me say over and over the years, that's where the carriers start to get really concerned. 10 cents per member per month might not seem like a bunch to this committee, but you all know that it is collective. That's not really the threshold. We are talking about the sum of all the mandates. And as all of you know, Maryland has the most mandated benefits of any state in the entire country. We are right there with California with about 60 mandated benefits. That is concerning as we talk about maybe the most concerning time in affordability we've seen since the Affordable Care Act. What happened in Congress last year and the not renewing the affordability provisions with the enhanced subsidies is having downstream impact. And it's also at the end of the letter that was shared by the MACC, Dr. Jacobs says we are unclear of what the downstream impact of this bill is. So there is enough in that letter and over the last couple of years, and with 60 mandates, we have to be really careful. One additional thing that I wanted to add is this is probably the fourth mandate that we're passing this year in the time that is the most concerning in affordability we've had in a long time. So I just want to suggest that the commission continue to use prudency and to be cautious as we move forward in an uncertain time. There's no harm in taking the time to find out exactly what the actuarial analysis, and it's not like Marylanders aren't going to get access. Like I said at the beginning, the carriers are already covering collaborative care models, but taking away cost share is a different discussion that will have affordability concerns. Thank you.
Thank you.
Madam Chair, would you like any additional information, or would you like me to hold?
Hold, because I have, we're going to hear from another carrier. So after Kim, then I'll come back to you, David. Okay? Kim.
Thank you, Madam Chair, and I apologize for being off camera as I'm unfortunately in transit, but appreciate the opportunity to speak today. I won't, let me do this. I don't want to just simply repeat what Matthew said. I think he did a really good job explaining what our concerns are. The one thing I would like to focus in on that I would say was particularly concerning was, unlike the way the state, leading in the country, has chosen to evaluate mandates and the role that carriers have historically played in providing information and insight into the things that you can't see just from the all payers claims database, but our actual experience administering these benefits and what is happening. That didn't happen on this particular benefit, and that is concerning to us, just because as Matt highlighted, we're in a uniquely fraught time from a cost perspective in the insurance industry, dealing this year with the expiration of the enhanced premium tax credits, enhanced advanced premium tax credits, and the cost pressure that's already creating for people who are desperately looking to be able to purchase insurance and may not be able to make that threshold now. We are seeing that impact in the market. And so as you all are considering mandates, they seem small one by one, but their cost is absolutely cumulative. And it does have an impact on the people who ultimately pay those premiums. And so we would have much preferred to see a more traditional review of this mandate, as opposed to this sort of shorthanded version that did not have any carrier impact or thoughts included with that assessment. That gives us a little bit more concern. And other than that, I will just endorse the comments of Mr. Celentano, and I'll leave it there.
Okay, thanks. All right, David Sharp, I'm coming back to you to respond to the carrier's concerns.
Sure, and thank you for the opportunity. We greatly appreciate the input from the carriers. We have a great deal of respect for these individuals and the great work the carriers do. I would note two things. One is that Mr. Celentano actually called out specifically, and thanks for doing that, the exact methodology that we use when we send state mandates that we've asked to study to actuarial firms. We used no different approach in analyzing it internally that we request from the independent actuarials. So we make sure that there is consistent alignment on this sort of work. It's not the first time we've been asked by the legislature to take on this kind of analysis in a short period of time. The second item I would note is that the notation by Dr. Jacobs is actually pointing out in terms of the downstream benefits, which is reduced ED utilization as well as reduced admissions. So that's the actual downstream literature review piece that Dr. Jacobs was referring. And I think lastly, I would note that if you look at it by market segments, it is on the individual market. It was noted in the financial analysis, it's 10 cents per member per month, or an increase of 0.01%. And then it gets much smaller when you look at it by the group market segment. So I think Mr. Celentano's comments were appropriate, and hopefully I'll shed a little bit more light on them for the committee. Thank you, Madam Chair.
Thank you. Yeah, are there any questions from the committee? Delegate Kipke.
Thank you, Madam Chair. David, how do you respond to their issue regarding not reaching out to them for their data?
Thank you for the question, Delegate Kipke. We actually use their data, sir. The data that they submit to the medical care database, which is the same data the actuarial organizations use when they complete their analysis. So there isn't two different data streams. There can be questions that are raised to the carriers and more information sought. But in this particular analysis, the medical care database was complete, and again, parallels the same analysis that the actuarial firms use.
Madam Chair, would you mind if we ask Matt Celentano to, there seems to be a disagreement about this. I'm just trying to understand what the real story is.
Right. No, I appreciate that, Delegate. Yes, Matt.
So thank you, Delegate Kipke, and thank you, Delegate Collison, for giving me the opportunity. So it's one thing to ask for data from the all-payer claims database. That's fine, but that's generally on the mandate and the coverage and what the claims are that are paid for their particular service. It does not take into account what this bill would do, which is to take away the cost sharing. It is one thing to cover the service, yes, but the way that we cost a service and offset the financial implications is by having a small deductible or co-insurance or whatever your plan is. That's an important factor in the financial solvency of this entire sort of system. They did not ask for data from the carriers, so we can't give the full picture. We also can't give an analysis of each plan and how the cost share removal would impact those plans. Also, as I referred to earlier, there are a couple of carriers in this world, especially in the individual market, that have started to cover collaborative care models in the past year. So that look at the claims database would not capture the entire marketplace because some carriers didn't cover it and have no data to share to the claims database. So once again, I'm not saying it's not a laudable goal, and maybe we should cover this, but we shouldn't cover it until we have full actuarial and financial impact.
Thank you.
Thank you.
Any other questions from the committee? So I may be digging in a little bit deeper, David, on Matt's question. I guess, so if I'm correct, every plan may have a different copay, a different co-insurance, and it varies from plan to plan, which you wouldn't necessarily have access to. Is that right?
We wouldn't have access to, we wouldn't have access to, actually, I take that back. If it was paid via a claim, in the claims data includes the patient portion amounts. So we would have that information. I think what Mr. Celentano is referring to is any claims that aren't included in the database. Maybe they occurred in the last month or two, by way of example. But that is, while he brings out an interesting point, I would note that is no different than how state mandates are reviewed, because the payers wouldn't necessarily have all the data paid, because claims adjudication can sometimes be a longer journey when there are questions on claims or it's not reported or finalized. And it's the same methodology when the legislature asks us to study a mandate that the actuarial firms would use. But the only difference is that there wasn't direct engagement with the carriers. And to Mr. Celentano's point, the uptake is so small that there wouldn't be a lot of evidence to suggest that the estimates were flawed.
Okay, Matt, I'm going to go back to you, and then the committee's going to decide what we're going to do.
Thank you, Madam Chair. And I just, and I respectfully disagree with Mr. Sharp. I think that there is more to the story here. They would be able to see exposure to the marketplace by what the beneficiary had paid in a co-insurance situation, but not a copay situation. So This is really a more complicated thing than I think Mr. Sharp is letting on to. And I would say that by relaying to this committee, I think it does a disservice that has very, very tiny impact. 10 cents per member per month is big impact when we're talking the collective world, the collective landscape of 60 plus mandates. If we keep adding them and adding them and adding them up, it has an affordability factor that we have to wrestle with. Once again, I'm not saying that it's not a good service. The carriers are covering it. We just have to think about what the impact is of taking away cost share. It could have bigger impacts than 10 cents per member per month. That's it. Thank you very much. I appreciate the time.
Thank you. So we have to the committee, we have a couple of options here. We have an amendment from last week that would create a study, and I'm thinking this study could inform us of how to calculate the impact of co-pays and co-insurance deduction. So that's one option. And the other option is to pass the bill clean without the study. Now, if we do a study, we can have them come back in December of this year so that we'd be prepared to do something next year. So Dan, before I let you go, I'm going to ask if the committee has if the committee members have thoughts, questions, considering those two options. Okay, seeing no hands go up. Dan, you have a thought?
Yeah, I just wanted to kind of, give some just context, heading into what you all are doing. And I really appreciate the kind of consideration and really kind of intentional thinking through this bill, and really appreciate MHCC and doing that quick, comprehensive analysis. And I just wanted to kind of offer a few thoughts before you head into kind of your decision making. We keep hearing over and over again that this is a new mandated benefit, but there's no mandate here, and there's nothing in law or in this bill that requires any carrier to provide coverage for collaborative care. As Mr. Celentano said, rightly so, they do all do it because they see the financial benefit of it. We've seen just late last year, a report came out presenting evidence from 4 different studies, all with payers involved, Blue Cross Blue Shield in Arkansas, Independence Blue Cross in Pennsylvania, Kaiser Permanente twice, that shows really significant total healthcare savings because of the way they've implemented the collaborative care model. So again, no mandated benefit, nothing that requires the carriers to continue providing collaborative care. But I think even with the cost sharing that they would because of this benefit. Another point is that, the state and this committee has really been working for years to build out the collaborative care model and expand uptake of the collaborative care model because of the benefit that we've seen, both human and financial. You all passed a Medicaid study and shut that Medicaid pilot study down a year early and expanded it statewide because of the impact. And just one more comment, Madam Chair. This is really a key recommendation around the workforce issue. We're facing workforce issues throughout the behavioral health system. The workforce report that came out last year that was legislatively mandated said, expanding access to collaborative care, especially in rural areas, as a way to mitigate those behavioral health workforce issues. And so again, I really appreciate the consideration here. I really appreciate MHCC, given the kind of findings that they've come back with that show kind of the overall small cost impact. I would really just urge the committee to move forward with the bill as introduced, so that we can kind of really expand this, and just help. It's a small impact, broadly for carriers, but it's a really huge impact for patients and making sure that they can get the care they need and prevent an escalation of their symptoms. So I'd urge you all to move the bill as drafted. And thank you for the time.
And thank you, Dan, for your comments. Matt, I'm going to come back to you and Kim, and I'm going to ask, so the departmental bill on mental health parity is on its way. It's passed the Senate. It's passed second reader on the floor, which is making, just codifying the accountability around mental health parity. Since this bill is addressing mental health, would that not help the carriers in terms of making sure that they are reaching parity because of the connection between primary care and behavior and mental health? Is that something you could look at in terms of ultimately downstream reducing cost? And Kim, you want to answer that?
I'm happy to take a stab at it, Madam
Okay.
Chair. So on its face, I think that argument makes sense. I think the issue with this bill is different because we're talking about the economics of it, right? And so, as Mr. Martin just said, right, we are choosing to cover it because we do see the value of it, and where it talks about savings, that savings is occurring because it is happening in a space where the cost sharing also exists, right? And so you change the savings equation, dollars are now going to have to pay for things that the cost sharing was helping to support. And so there's a real economics to how all of this works. And so as the state pushes towards more and more first dollar coverage, it absolutely changes the economics. We've had these record increases in our individual market premiums, and they are a market who are taking up this benefit. But and yes, it seems like a great idea to say, and now they won't have any out-of-pocket costs. It only helps you to have no out-of-pocket costs if you could afford the premium to buy the product in the first place, right? And so that is where I think you're hearing us come from. Yes, we believe in collaborative care. Yes, we think there probably is a world where we get there when it makes sense for first dollar coverage. As this is becoming new for carriers, it really becomes challenging when the state gets ahead of us on what we can make financial sense for the people who purchase the products. But yes, I do think that there's a reason why this marrying of the primary care and the behavioral care is important and is something you see the industry leaning into for the reasons that you mentioned, including parity.
Okay. Matt, final.
Yeah, thank you, Madam Chair. I just want to sort of correct, I think, something that Mr. Martin has said multiple times now, that this is only going to impact the carriers a little bit and only going to hurt them a little bit. It's not going to hurt the carriers at all. This is going to get passed through directly in premium. It is going to go directly to constituents. And if we are going to continue to take affordability as a major concern with this body and this General Assembly, we have to be stewards of that accessibility and affordability, and it all comes together. So Mr. Martin can keep suggesting that it's going to hurt the insurance companies. It's not. It's going to be passed directly through in premium.
I understand that.
I know you do.
Dan, last word. And then
just real quickly, and thank you again. Thank you, Mr. Celentano, Ms. Robinson. You know, Ms. Robinson said that, you know, these cost sharings, you know, that the folks are seeing total healthcare costs really take into account, or the savings take into account the cost sharing. But, you know, the reports and the findings from these reports include the payers that I'm looking at. You know, one saved $340 per member in over 6 months. One saved 13% per member per month in 1 year. That seems like a lot more than the $1.04 per year that Mr. Sharp indicated, you know, would be the cost for the cost sharing here. And additionally, you know, I mean, if you're saving all this money, why would you pass the money, the cost sharing onto the consumers? You know, if you're going to be saving all this money, it seems, I don't know, it doesn't seem right that you would pass those additional costs onto the consumer when you're saving so much money from collaborative care in the first place. So
never mind.
Okay, so I think that we have heard both sides. And I am going to ask the committee if they would consider going back to the amendment that we had last week that would turn this into a study and do a comprehensive study on the impact of removing the cost share.
Move the amendment.
Move the amendment. Do I have a second?
Second.
Okay, it's been moved and seconded. Those in favor of the amendment, please say aye.
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 Anyone opposed to the amendment? Okay, do I have a motion on the bill as amended?
Move the bill as amended. Second.
Okay, it's been moved and seconded. And any more discussion from the committee on this bill as amended? Seeing none, all those in favor of the bill as amended, please say aye. Oh, Delegate Gazzoni, you have a question?
Yeah, just a quick question. The report will be done within the year, so we can.
Yes.
Just wanted to confirm that. Thank you.
Right. So there'll be an opportunity for a policy in 27. Thank you for clarifying that, Delegate. Any other discussion? Okay, those in favor of the bill's amendment, please say aye.
Aye.
Anyone opposed? Seeing none, the bill as amended passes unanimously. I think we probably have like 5 minutes, 5 to maybe 10 minutes now. I'd like to start on House Bill 1068 if I can. Lisa, you want to tell us what 1068 does? And we will hold House Bill 1093 to the meeting on Friday.
House Bill 1068 requires certain carriers to provide a special enrollment period for an individual who has become employed by a small employer that does not offer an employer-sponsored health benefit plan. The special enrollment period must be open for 60 days and begin on the first day of employment of the individual by a small employer that does not offer an employer-sponsored health benefit plan. There is an amendment that addresses some concerns raised by the Maryland Insurance Administration. The amendments add definitions for employer-sponsored health benefit plan and small employer. They're already defined in other sections of the code, so this is just taking those definitions. And the amendment clarifies that the special enrollment period includes dependents of the individual that is newly hired by the small business.
Okay. And in concept, so before we start discussing in concept, one of the things that I would like us to consider is some sort of uniform form which the commissioner has agreed to create in a conversation with me that would be provided by the employer to the employee that states the date of hiring. Is there any question or concern about that amendment or that proposed amendment? Okay, so like I said, conceptually, I'd like to add that to the MIA amendments. So discussion on the amendment, or well, let me ask this. So basically we have 3 amendments, the definitions, clarifying that who is covered or who's
That dependents are included.
That dependents are included, and a uniform form that defines when the employment begins. So I've got Kim Robinson first this time. Kim? Oh.
Her hand was left up from the prior.
Okay. Then
Yes, thank you. Sorry.
Okay.
Sorry, Madam Chair. But also I appreciate the form because that was definitely one of our key concerns was the proof from the employer. So thank you for including that.
Okay. Matt?
Thank you, Madam Chair. I think that the carriers are still conceptually opposed to this bill for a variety of reasons. One, well, a variety of reasons, I should say. But I mean, one of the big ones is we think that there are a robust amount of special enrollment periods already available. And for the folks that are going between jobs, if you lose your job, you are eligible for a special enrollment period. If you change, your eligibility level due to increase in pay or loss of pay, you get a special enrollment period. If you have a change of life status, including a divorce, having a child, death in the family, all of those trigger a special enrollment period. So we are opposed to the idea of creating this new special enrollment period, but I do appreciate the amendment. I think that my question would be not just a uniform form to verify a RIB, but how do we verify that first day of employment? And I think that we need to know exactly when the timeline, when the clock starts ticking, so to say, so we can measure those 60 days. And if we can figure out a way to find out how to verify that first day of employment to start the clock, I think the carriers would be in a much more comfortable position. So I appreciate the back and forth, Delegate Collison.
Do you think you could work with the commissioner to determine what would be needed to do that?
we are always happy to work with the Maryland Insurance Administration.
Okay, thank you. Given that, is there a motion to on these amendments, on the three amendments? Delegate Kipke, or you have a question?
You can do the amendments first if you want, and then I'll.
Okay, yeah, if I could do the amendments, I'd appreciate it. Any
Move the
motion?
amendments.
Okay, so
Second.
okay, they've been moved and seconded. Discussion on the amendments. Okay, seeing no discussion, those in favor of the amendments, please say aye.
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 Those opposed, raise your hands. Okay, so the amendments are unanimous. Now, do I have a motion on the bill as amended?
Move the bill as amended.
Okay, and a second?
Second.
Okay. Discussion on the bill. Delegate Kipke?
Thank you, Madam Chair. The way that I've read the bill is that there's no, so I guess my concern about the bill after reading it is, someone who is gaming the system and not paying into the system finds themselves sick, can get a job for 1 5-hour shift a month. Is that correct? A new job for 1 5-hour shift a month? And it isn't actually like, starting a new job, it's gaming the system. And that's, something that obviously we've always wanted to guard against.
Right. Now, I'm going to go to Matt. Matt, is that?
No, Kippy, I think you hit the nail on the head. That's basically our concern, is that there are no protections for folks that might be wanting. I mean, nobody wants to get sick, right? But this bill obviously leaves open the opportunity to game the system. And like you said, I could not be getting insurance and not paying into the system for the overall risk pool and get diagnosed with something pretty significant and then get a job for 5 hours a week or whatever your parameters you just mentioned, and then be able to go get health insurance with no underwriting because we community rate. So it's leaving open an opportunity for it's not fraud, but it is gaming the system. And that's the carrier's concern, because we don't want to have adverse selection and cherry picking and a potential to increase the risk pool unnecessarily.
And just one quick follow-up. Is there any requirement that after they get insured that they continue with that employer?
There's nothing in the bill that speaks to that, but as long as you, after that point, after you are enrolled, as long as you continue to pay your premium, no insurance company could ever cancel you.
Okay, thank you.
Delegate Johnson.
Thank you, Madam Chair. Matt, you said there's already things in place if you change jobs for special enrollment. So what would be the difference?
The difference being here, Delegate Johnson, is that the special enrollment periods are set up now is that if you leave a job or you're terminated from a job, you automatically qualify for a new special enrollment. This is a new special enrollment for folks that might have already not had a job and decided to forego the traditional open enrollment period. But if they didn't have a job for an extended amount of time, our concern was that, or not concern, but we wanted to point out most likely that Marylander would have already been eligible for the Medicaid program with no income, and there is no open enrollment on Medicaid. It is ongoing. You can be eligible and enroll today, or in November, or March, or June. It never closes.
But and correct me if I'm wrong, but did I hear you say that if you change jobs, there was an enrollment period, or if you got a job, there was an enrollment period? So
if you left a job or were terminated, it triggers a special enrollment period.
Okay. And how about when you get a job?
Not right now. If you get a job, we're encouraging the small group market to continue to be fostered and to shine, so to say. If we would hope that you would be able to get into a job that offers employer-sponsored benefit coverage. If you don't, this is what that bill addresses.
Okay, thank you. Thank you, Madam Chair.
Delegate Kipke.
Why would someone who's healthy pay for insurance? I mean, if you know in the back of your mind that if you were to get sick, you just need to go get a job for a minute at McDonald's, and then you can get insurance. So why not save all that money?
That's exactly our concern, Delegate Kippy. But I will say the first question is, why should people get insurance? Well, that's for your financial security. And that's a longer conversation that we probably have for subcommittee today. And you've been on the committee long enough to understand why we believe that is a worthwhile approach.
Anybody else on the committee before I call on Stephanie Clapper, Delegate Taveras? And then I'll go to Stephanie.
Because people are hypochondriacs.
I'm sorry.
People are there may be people who are hypochondriacs and they want to be protected, and they feel that they feel like having insurance is something that they need.
Yeah.
Some people have been
Delegate
raised like
Taveras,
that.
I would argue that every Marylander needs comprehensive, affordable health coverage.
I would agree.
Yeah, I think that's why.
Some people more than others, have been raised to have that, and they'll go out of their way to get it.
And I think that's the intent of the goal of this bill as well. Stephanie Clapper.
Yes, thank you. Stephanie Clapper from Maryland Healthcare for All. I just wanted to add that, people can get sick, but people can also get in car accidents. There are all kinds of ways that people are going to need health coverage, and ones that you can't predict, ones you can't say, oh, I just, I'm on my way to the hospital. I'm going to sign up for a job right now and try to get healthcare. We have found in focus groups that, it's great to have all these special enrollment periods, but a life change happens, you lose your job. A lot of times people are just trying to make the ends meet so they can survive and pay their rent and pay for food. Marylanders want health coverage, but our focus groups show a lot of times they don't know how to get it. They don't know what's available. Now with all of this new federal messaging around HR 1, some people think Medicaid is completely gone. There's a lot of confusion out there. And I know as a previous member of the small business committee that MHBE convened that I think led to this legislation, that MHBE has been doing a lot of outreach to small employers. And this is a way that small employers can let new employees know about a benefit that could become available if this bill passes, that they otherwise may not have successfully navigated to get in the past. So just wanted to put that perspective out there, and thank you for this discussion.
Thank you. Delegate Kipke.
I'd just like to say that all of the examples that were just raised are not addressed by this bill. If you lose your employment, it triggers open enrollment. If you get in a car accident today and you're uninsured, you're still uninsured. What this does, though, is it creates an incentive, even if it's 3% of young, healthy people that were working to get into the pool, even if it's 3%, say, I'm healthy, I'm in my late 20s, I want to save that $500 a month. I'm just going to go uninsured, because if I do happen to get sick, I can just get a little part-time job for a minute. And so for those reasons, I'm opposing the bill.
Okay, thank you. Matt?
Thank you, Madam Chair. I think Delegate Kipke said it very well. I don't think anybody is questioning the value of insurance. And I think everybody on this meeting wants to have as many people covered as possible. But this General Assembly has spent a lot of time trying to protect affordability, in the past decade or so. We propped up a young adult subsidy program, right? We want none of this works unless we get younger, healthier people to help offset the risk of morbidity in the pool. And if we are going to take measures like House Bill 1086, which could delude some of those protections and not encourage, but allow for cherry picking and adverse selection, we are going to offset some of those gains we made by having some of the young, healthy people in the pool. So my concern is that we are not going to encourage people to get the coverage when they aren't sick, and create an opportunity to sort of game the system, which could have dire financial impacts on the backside. Thank you.
Hey, Stephanie, and then we're going to wrap up here.
Thank you. I agree. It's really important to get young and healthy people into the marketplace. And We know that when young adults are offered health coverage by their employers, they take it up at the same rate as every other age group, but they tend to work for employers that don't offer health coverage, and this could be a way to get them in.
Okay. So I'm seeing a new face, Jess Gorski, and I will let that be the final contribution from outside the, now Jess just disappeared. I think. Oh, there
Hi,
she is.
it's Jess
Okay.
Gorski. I'm with the Maryland Legislative Coalition. I just, my feedback too, I guess, would be from a business perspective. You know, I was a small business owner for 17 years. I couldn't provide insurance or other things, but you know, when trying to talk to someone about coming on and working for me and letting them know that if they join my company, that there's an opening for them, be able to get into a market, being able to kind of give them that step, being able to have those kind of things that are maybe more attractive and saying, you know, there's an open moment, or this is a way that you can get health insurance if, you know, you come on board. There's just different things that it allows employers to help educate their employees, maybe get, you know, benefits to their employees that maybe weren't going to be available to them when they come on board. And maybe they're going to go somewhere else with a, you know, a company. But if they know that they can access it through yours, maybe they'll stay with yours if they can join at that time. So it also, from a business perspective, allows, you know, small businesses to maybe be more attractive because potential employees who are coming into the market would be able to join, you know, and get health insurance at that time. And of course, there's always risk to people gaming the system, but I think, you know, some of the things that you mentioned about going back and verifying, you know, if you're an actual employer, when was this person employed? You know, those different things that you have to do anyway. You enroll for insurance or any of those other aspects. I mean, keeping those guardrails on is important, but there's also that other aspect of thinking about businesses who can't provide that and being attractive and leaving this as something that they can, you know, have for potential employment.
Great. Thank you. All right, we have a bill. The bill has been moved and seconded as amended. Any further discussion on the bill? Seeing none, those in favor of the bill, please say aye. Okay, either everybody's on mute or.
And this is as amended, right?
Yes, as amended, on the bill as amended. Okay, let me ask this. Who is opposed to the bill? Okay, so I have Delegate Kipke. Anyone else? Okay, seeing no one else, I'm assuming everyone else is in support. Anybody check me on this? All right. So the bill passes as amended. With that, we will adjourn this subcommittee for today, and the Health Committee will be beginning its hearings at 1 o'clock. Thank you all for the great discussion this morning. I appreciate it.